joining us. We have Mahender Chhabra, who's the CFO of the company, and Anurag Gahlot, who is the CEO of the company, joining us. Very good morning, gentlemen. Thank you so much for joining us on ET Now. And let me talk about your earnings, because you all have delivered a double-digit growth in the quarter gone by, that's Q4. Do you see this momentum continuing, and do you think this will be sustainable going forward?
First of all, you have to see that this is the best ever results on the quarterly annual basis on the revenue as well as on the EBITDA side. If you see that on year, we can find that PAT has also improved on the sequential basis with 8 to 9%. In this particular financial year of FY 24-25, there has been expansion. There are 3 plants into that. So considering that, and on the sequential quarter-to-quarter basis, you will find that there is a PAT is improving. So there is a trend in improvement into that. If you see on the EBITDA, EBITDA is 2.1%, which is good compared to the year-on-year basis. And we think as we are progressing on these Greenfield plants, we will find that there will be a definitely this is going to be improvement in that. EBITDA is not something which we talk about all the time, and we try to focus on the ROS. And if you have seen that, we have also achieved 42% ROS in this financial year 24-25, and which is more than 40% as the group has given the norm of to keep the more than 40% ROS.
Okay, morning, gentlemen. This is Nehi also joining in. Mahender, we'll come to you. Give us a sense on your margins front, because margins have seen some pressure in the quarter gone by. What are the key factors impacting the same, and how do you see margins expanding going ahead, given that on one hand you have copper prices that will be passed on, but on the other hand, new plants could be a possible drag on the margin. So what's the outlook on that front?
So if you look at the margins, like Anurag mentioned, as an organization, we focus more on ROS. And last year we delivered 48% ROS. This year also we have delivered 42% ROS. And that is after the impact of the pre-operative costs of the 3 new greenfields. And if we exclude the impact of these 3 new greenfields, our ROS would be even much better than that. Coming to the margins, so one, I mean, there would be impact of the copper, because there's a time lag when we recover it from the customer. With most of the customers, it is at a quarterly interval. With some of them, it is at a half-yearly interval. And hence, one quarter might not give a very clear picture, but we need to look at a slightly longer picture. And hence, if you look at the EBITDA margins for the entire year, we have grown in absolute terms by 10.5% in EBITDA, excluding the impact of the greenfields, where there has been a certain ramp-up cost.
Talk about EV, because that one contributed about 4% to your overall revenue mix in the quarter gone by. How do you actually see this share evolving over the next couple of years? Are we expecting it to actually rise further, or are you going to maintain this sort of a revenue mix?
In the EV segment, we are supplying to all the categories of vehicle. You talk about the passenger vehicle, commercial vehicle, 2-wheeler, buses, 3-wheeler, and even the land mover also. So we are already supplying electric vehicle to all the categories. If you see the expansion which has recently happened in these 3 plants, there's a EV and ICE engine harnesses we are supplying. It's all depend how the market is going to take place for EV vehicle. The point over here is that we are manufacturing a plant which can support any sort of harnesses for any of the category in the automotive sector, and we are ready for that. Once the volume picks up, our contribution to the EV vehicle will also increase accordingly.
Okay, and before we let you go, Mahender, also help us understand, when do you expect the new Greenfield plant to reach optimal utilization levels? If you could give us any timeline on that front.
So there are 3 greenfields. One of them is already operational in FY 24-25, and the other 2 will be operational between Q1 and Q2 of current financial year FY 25-26. So by end of H1, we should have all the 3 plants operational. And we estimate that if we get the orders as per the forecast that we have received from our customers, in H2, these plants should start operating at the proper capacity utilization.
All right, then, gentlemen, we leave it there. Thank you so much for joining us in ET Now to talk about the quarter gone by for Motherson Wirings. All the best to you and the entire team for the new financial year. Thank you so much for being part of the show. But let's bring on board our...
If you like this video, then like, share and subscribe to ET Now.